Welcome back. You're watching us here on Bazaar Morning Call. In case you've just joined in, it looks like a good opening for the market. A 75-point uptick is what the Gift Nifty is indicating. Let's welcome Prakash Diwan joining in on the show now. Prakash, good morning. All the durable makers are in focus this morning. There was a conference call that Voltas held, and then all the brokerages have gone ahead and upped their estimates. There was a large trade that took place on a durable seller, Electronics Mart. I'm not sure whether you've tracked that or not. What are your thoughts on EMIL, and do you have thoughts on Voltas? Any particular consumer durable stock that you like?
Good morning, Mangalam. So, I think interestingly what the Voltas commentary mentioned, and I'll take that first, it's about, them being able to manage to grow, continuously grow, even if it is going to be a bit lumpy going ahead with decent margins. Because what we've seen in this earnings season is that there has been, wherever we've seen retention of margins, volumes have taken a backseat. And wherever we've seen some companies clock decent revenue growth, margins have been kind of compromised. So, that's the interesting part in this space. And to be honest, it's not something which has run up so much, as compared to cap goods or as compared to staples and all of those. So there is definitely some room, some comfort there. But overall in the market, if you really ask me, I'm not looking at buying or adding anything till the peaking out happens, and which in my understanding is going to coincide with the first announcement of the US interest rate cut. So as and when that happens, probably is going to be the peak of the market for some time. And then we'll probably review it. But on the basis of the Voltas commentary, yes, consumer durable segment as a whole looks promising, but there's nothing which is outshining in that sense or attracting us to buy from that segment yet.
Got that, Prakash. Any thoughts on on Zomato? We're going to talk more about this. You must have seen that tweet about highest ever orders over the weekend, and there's a call as well from UBS comparing where Zomato is trading it as compared to some of the consumer names, and how it's more attractively. I mean, it's a little expensive, prima facie, but on other matrices, as I think the brokerage is pointing out, it's doing a lot better. Your thoughts here?
Good morning, Prashant. No, so you're absolutely right. I think Zomato has morphed from being treated with FOMO to actually something which people want to buy from a momentum or a growth perspective. Now, if you are willing to live with certain downsides which could intermittently happen in the next 4 or 5 years, the kind of market size and the market share that Zomato takes thereof is going to be significant. So this is a classic, and I mentioned this some time back when it started making profits and things were evident. But then everybody will say I said so. But today, if you were to stick your neck out, it's a gorilla theory. In a world of monkeys, there's one gorilla who's actually likely to become so big and significant that they will command premium not just on valuation but even on pricing. And I'll tell you where the pricing is coming. The Blinkit model has given them so much of data richness that they are able to work with OEMs in such a simple way, the principles, and tell them which PIN codes matter and what times of the day matter, what days of the week matter. So all of that data is going to really help them fetch a lot of onboarding premium. So I think it's a great story in the making. If you will, you could add on dips, but even otherwise at these levels, it does offer that growth momentum that you could ride for the next few years.
Yeah, you're right. Actually, data is the new gold, and these platforms have all the possible data on when I'm eating, when I'm sleeping, when I feel hungry at night, and where I want what delivered. So take your point. It's pretty fabulous, the wealth of information that they have. As you were hearing the conversation there, and this remains the question now: whether Bajaj's CNG bike emerges as a winner, or whether these EV bikes from Ola they emerge as the winner. We'll have answers only, I think, a quarter down the line. But is it safe to say that Hero is looking at some serious competition? In terms of stock positioning, what would you change? What would you add and subtract, given what we are likely to see at the entry level?
Okay, so here's what, Subhi. The EV portfolio for most larger established players, two-wheeler players, is not so significant as yet. So it won't kind of move the needle so much in terms of, the stock positioning. But on this debate between an EV motorcycle and a CNG-driven bike that only Bajaj has, I think Bajaj is also taking its time to kind of get this, not just piloted, but introduced commercially in a softer way so that they can clear all the nagging issues around the launch. the utility of the bike. But once it gets established, we are such a price-sensitive market, and the segment that they are catering to, you don't have electric charging infrastructure in those markets where Bajaj is going to sell CNG, but CNG could possibly be available. So I think it definitely theoretically has a very positive construct. And you remember the stock reacted so positively after the launch was understood by most of us. So I think that's here to stay. A couple of quarters, it will just get strengthened. So I believe EV bikes is still a lot of issues around it, especially the charging part. And they're usually used for long distance drives, right? So you really don't, you can't depend on EV charging to take you 100, 150 kilometers at a stretch and come back from where you go. So that's an issue with bikes yet, and that's why scooters have proliferated. So wait for some time, but I still have a very strong view on Hero Moto bouncing back given the metrics that it has reached. It's probably bottomed out, if you ask me, in this quarter. Post the monsoon, things would probably look very positive for them.
All right, Prakash, well, thanks for that. And I want to ask you about, and Mangalam, I'm sure you've seen that story, which is the big story today, the foolproof indicator. Innerwear sales apparently are on the up and up.
Yes,
so it's proof of, as a friend put it, ye andar ki baat hai. So
Alan Greenspan used to subscribe to the underwear index. He said that during good times of the economy, the sale of men's underwear increases.
I thought it was during COVID. That's when all these stocks were going through the roof. But now it's turning on its head, is it?
I'm not too sure about the COVID bit.
No, actually, COVID...
it was all about innerwears. Remember, it was the era of Page Industries because that's all we were buying.
No, I think that is before COVID. COVID, I think it was, there was nothing very much...
It's anyway, we're going on a tangent.
Something for Prakash to chew on, and I will come back to him. I mean, it's being seen, I read a headline saying it's the indicator of the economic turnaround to come. But more on that later.
Prakash, I mean, we've discussed Zomato, we've discussed the auto space. Anything else? I mean, the earnings season is over. So which are the brightest stars for you? The one or two stocks where you'd, go ahead and punch in a buy, even now with the market being where it is or the stock being where it is?
So, what stops us from adding to some of the names is the levels of the market itself, where we feel it's still a little bit, frothy. And we would see lower levels. But if I were to buy at lower levels subject to that, it would be, apart from the names like Zomato that we discussed, it would be something like a Hero Motocorp. It would be some of the OMCs, which we've ignored because they normally don't make news headlines. But the way things have been for the entire quarter and what's anticipated going forward on crude levels, so you can very well imagine they will actually clock revenues which are faster, which are far higher and faster than most PSUs would do. So I would believe HPCL, IOC, BPCL, they make for very good buying even at these levels. But apart from that, it'd probably be a small bank here and there. It's more of adding to the same names. We've not found any numbers for any of the segments or stocks which have been very promising that you would kind of go and load up. All of them seem to be fairly priced. But yes, as I said, at lower levels, you would buy probably an ITC from the consumption basket. Autos, it would probably be a Hero Moto. So those are the names that we would still stick around.
What are your thoughts on the cement space now? Because over the weekend, we also got the news that JSW Cement has filed for papers, finally a 4,000 crore issue, of which 2,000 crore will be fresh. Parth Jindal had said to us that, they're eyeing 60 million tons of capacity by the end of this decade. And it could be both organic as well as inorganic. They're mainly in the south. And south is where a lot of the action is as well, given, Ultratech's deal with India Cements. And this morning as well, there's the completion of acquisition of Penna Cements by Ambuja. So many assets which are on the block, so many buyers which are looking to strengthen their positions. And all of this as we come towards the end of the monsoon season, where there is perhaps the hope of a price hike coming in as well with higher infra, etc. play. How do you look at the cement space right now? Are there any stocks that really stand out for you?
Yeah. So, to make it very simple, it's either the acquirers or the potential acquirees, if I'm... those are the two segments that you need to fish out of. And if you look at most of the eligible small players, prices already gone up in anticipation of some kind of an inorganic growth participation that they would be involved in. But if you hear commentary from most cement players, they have been very clearly not anticipating a price hike or they've not made it imminent in their projections. And the cost advantage that you saw in the last couple of quarters will probably also stabilize now among them. So there's nothing much in terms of margin growth. Now, where do the volumes come from? And that's where the consolidation becomes much more promising. So I would still go with the acquirers. What has happened to Ultratech after it's acquired these 3-4 assets in the last few years? They've ramped up, got economies of scale. The same thing Ambuja is likely to do. So if you really were to buy into a business for the long term, it would be something like Ambuja. Of course, you could debate on the pricing and all of that being higher now. But I believe what they are trying to build as a portfolio is going to be significantly dominant in terms of pricing power. And that's what the cement industry needs eventually. So I would go with Ambuja. They've done very well in terms of rationalizing their existing assets as well. And I expect them to continue doing well going forward on.